watching Business World Live. I'm Danny Laurel. Let's take a look at how the local bourse closed today. You can see on my Bloomberg terminal here, index up this hump day. We broke 7,300. That is upward 0.7%. We can close at 7,334.56. So quite an uphill climb. Very exciting for us. And take a look at our big movers here. The ones really lifting the bourse: Metro Bank, Jollibee, SM Prime, Mega World, Robinson's Land. So quite clearly, the property space has been in focus here. Ayala Land as well, one of the biggest gainers, following, of course, food as well as a bank, a very big bank. But you've got on the downside Pure Gold Price Club, that is down by 1.9%, and still quite a lot of holding firms, particularly Ayala Corp, SM Investments, Aboitiz, GT Cap. These are the big conglomerates that usually are known to be, gauges of the economy. These have been sold off this entire trading day. Now let's take a look at one specific sector we've been watching out for the past couple of days, and that is the mining counter. And some more faith here, actually a lot of buy-ins into these miners. First of all, you've got Global Ferronickel buying additional 24 stake in SE Asia Nectar, or Sea Asia Nectar. That is, of course, a port service operator. So they raised their stake to 64% from the previous 40%. That's around 192 million pesos. They say that this investment paves the way for the successful operations of the steel processing plant located in proximity to this terminal, which is in Bataan. And you can see Global Ferronickel enjoying gains of 2.8%. Another one, Apex Mining, which is up by 6.62%. It was actually on a trading halt. Let me click on that. It's out of the trading halt, and indeed closed by more than 6.7% up. This after they said that their primary stockholder, Prime Strategic, intends to make a mandatory tender offer for the shares at 1 peso and 30 centavos each. And take a look at the shares here. It's 1 peso and 45 centavos. And speaking of more investments here, we do have another one, MREIT. They have jumped by 70 centavos. That's 3.8%. So very lucky if you've been buying into these stocks on this specific day. Quite a lot of gains in just one trading day. This, as they've said, that they might diversify and invest in other types of real estate properties when we talk about the country's high growth areas. They filed a 3-year plan at the stock exchange. So recall that on December 20, they concluded the infusion of 4 buildings. And because of that, the 2022 dividends has now increased by 5.3% to 1 peso per share. So every time you buy a share of 19 pesos and 18 centavos, you do get 1 peso dividends, quite a lot. Another issue is they have said that they will have new investments in industrial logistics, warehouses, and other real properties in Cebu, Bacolod, Pampanga, and other growth areas. They've also said that they target to reach 500,000 square meters in gross lease area by the end of 2024. Now, still on the property space and its opportunities, to chat more about this, we have Joey Bondoc. He's the Associate Director for Research at Colliers Philippines. Good afternoon.
Hi, Danny. Good afternoon.
Joey, let's talk about this report of yours. Okay, you have a projection for 2022, but let's take a step back first and look at 2021. Now, at the end of the year, what's your general assessment? Has it been recovering the way you were hoping it would, the ways that the targets were set at the beginning of the year? Has it been, positively surprising or disappointing?
For the office market, we're pleasantly surprised that there were still transactions in Metro Manila. And not just in Metro Manila. In fact, outside of Metro Manila, you have the likes of Cebu, Iloilo, where we recorded office space deals. And that is good news. And we believe that that bodes well for the recovery of the property market. In terms of residential demand, 2021, we really saw a dampened take up of condominium units across Metro Manila, but we're likely to see some recovery starting 2022. Developers continue to line up projects, so that is still a positive trend for the property market. But retail, of course, very
Mhm.
positive with what's happening with the retail sector. Filipinos are spending, OFW remittances are stable, and that has really been, translating to greater consumer traffic in malls, and we see that across Metro Manila and even key provinces outside the capital region where malls are full, especially during the holidays.
Mhm. Okay, let's talk about these sectors one by one. You kicked off with commercial real estate. Which are the trends that you are going to be seeing to buoy the sector in 2022? Specifically in your report, you're still projecting a double-digit increase in vacancy rate, if I'm not mistaken. So is this going to be problematic, or is this actually signs that it's better than what we've seen in 2020?
Well, what we have seen is that both the developers or the landlords and the tenants have really adjusted to this double-digit vacancy in the market. So, how have they adjusted? For example, the tenants they use this opportunity to haggle for more competitive lease rates, and that allows them to move from the non-core locations to the core locations to the major business districts because previously lease rates in Makati CBD or Tigas CBD were really expensive. But now, because of the correction, a lot of tenants are able to move towards this locations, and we believe that that should anchor the growth in the office leasing in 2022 and even beyond 2022. BPOs continue to occupy office space despite their work from home arrangement. So that again is a positive news for the property market. We see the same in residential. The fact that developers continue to line up projects, there will be a pent up demand in 2022, and we're still optimistic that this pent up demand will kick in starting 2022. Remittances are still growing. Projection is 6% growth in 2022, and of course, a portion of this demand is still coming from your OFW. So, there are positive signs that we're seeing in the market.
You mentioned the fact that the BPOs are here. What about the Pogos? This used to be the bright spot during COVID. They seem to have gone away. Are you projecting that when things normalize, they will be back and absorbing the vacancies that they left?
Unfortunately, the Pogos are unlikely to return to the Philippines. They have
Okay, so it's not COVID related. It's just
no,
permanent COVID.
it's not. It's really the Chinese government clamping up or clamping down on these
Mm,
Pogos. I mean, they are really after these Pogo companies that have been operating outside of mainland China.
mhm,
The problem now is where are they heading? Are they likely to return to the Philippines? No, they've been moving to Vietnam, Laos, even Dubai, but they're unlikely to return to the Philippines. That's what we have been seeing. That's what we saw
mhm.
in 2021, and we do not see them returning to the Philippines and buoying the office leasing market.
Okay, when you talk about residential, Joey, where do we see the most growth? Is it still in the most expensive central business districts in condominium complexes, which pre-COVID was soaring, or has this trend persisted, wherein people are trying to look for bigger spaces, greener spaces, going to suburbs, possibly even going out of Metro Manila? Did that become a real trend, or now na nagbalikan na sa malls, nagbalikan na sa office, nagsisibalikan na rin ba yung mga tenants to their condos?
We project the demand outside of Metro Manila to continue. For people looking for bigger spaces, for lot only projects, for house and lot units. In key urban areas, you have the likes of Pampanga, Bulacan, which we always say remain very attractive for those looking for house and lot units, right? And but I think that the condominium market in Metro Manila is really up for a recovery in 2022. And we're really optimistic with the our projections and we believe that there will be a greater absorption or take up of condominium units in Metro Manila by 2022. So again, this is one positive trend that we see in the market. Developers continue to build condominiums, not just in major business districts like Makati, but even in the fringe locations, fringe of Makati, fringe of Ortigas, fringe of the southern part of Metro Manila, and even northern part of Metro Manila. So you have the likes of Las Piñas, Parañaque, and then Quezon City in the north. So, you know, developers, if I may say, are really firing from all cylinders, and we believe that there will be more launches moving forward.
What about the malls? What's the foot traffic like? And how was it like during the holiday period? To what extent are we back at pre-COVID levels?
It's pretty evident that malls are really recovering on their way to recovery. We see that not just in Metro Manila, but in the provinces as well. So, consumer traffic is about 60, 80% of pre-pandemic level before. But and now, based on what mall operators say, consumer foot traffic is now uh, probably even higher than the pre-pandemic
Wow.
figure. So that really is a very good factor, a very positive trend for the retail market. Of course, it's primarily driven by household spending, especially during the fourth quarter, during it, the holiday season, right? But we see that spilling over to 2022, especially as greater restrictions are relaxed across the country. So that's a pretty good indicator for the retail market, for the consumer market in general.
So mall is life pa rin. Walang nagbago.
Definitely,
COVID,
yes.
COVID.
And these are
Okay,
these are,
yeah.
are, are public spaces, so people will really gravitate towards malls.
So it's not going anywhere. What about tourism, Joey? Especially with this Omicron variant, travel bans. That's the way that the government is handling it, relying on domestic instead. Can we rely on domestic tourism? And what's your projection for 2022?
For the leisure, I think it's really the domestic and the local market that will help propel the leisure market here in the Philippines. It's the local sector that will first kick in and aid in the recovery of the sector. But the global travel, of course, is still struggling, and because of the Omicron variant, right? I mean, we see that in the United States, a lot of people shelving plans because of
Mhm.
cases now reaching what more than 200, 300,000 cases daily. So that is pretty alarming. But I think for the tourism market here in the Philippines, it's the domestic local sector that will first stoke demand. And a lot of local governments are starting to open up and trying to ease restrictions. We see beach destinations. In fact, if not for a Typhoon Rai or Odette, probably we would have seen a
Mm.
better um, picture of the local tourism, especially in the eastern, central Visayas region, right? But let's hope that these regions recover quickly, and of course, that should play a pivotal role in the recovery of the leisure market as well. 2022,
Okay, so bright spots here. Domestic tourism still intact. You've
definitely.
also got the shopping and the malls culture buoying the property sector. And you did mention, however, some risks when it comes to the commercial property space with some trends like the Pogos leaving as well as
Yeah.
work from home still there. But nevertheless, hoping for a rebound year in 2022. Thank you so much.
Yep.
That was Joey
Thank you,
Roy
then.
Bottom, Associate Director for Research at Colliers. Here are the other headlines for keeping our eyes on. Relief operations are still ongoing for the victims of Typhoon Odette. The Army will deliver 8 billion pesos worth of relief goods to the BRP Tarlac headed for Cebu. 13 military trucks were loaded with donations coming from a membership shopping store. These contain drinking water, cup noodles, canned goods, hygiene kits, and clothes. 100 linemen from different electric cooperatives in central Luzon, meanwhile, made their way to Visayas to help in repairs and power restoration. The government is also providing more funds to aid the individuals affected by the typhoon. The DBM says it has released some 827 million pesos to replenish the quick response funds of the frontline agencies. These include the Office of Civil Defense, the PNP, and the Social Welfare Department. The Budget Department also released an additional 1 billion peso budget to local governments affected by the typhoon. The DBM has so far released a total of 2 billion pesos to assist the hard-stricken LGUs. Now, the central bank is expecting inflation to remain elevated in December. That's falling within the 3.5 to 4.3% range. This follows the 4.2% CPI recorded in November. Now, BSP Governor Ben Diokno said their December forecast is mainly due to higher food and electricity prices caused by the onslaught of Typhoon Odette. Diokno said this could be offset by oil price rollbacks and peso appreciation. The BSP says that for now it will continue monitoring price developments. And this one from the Philippine Star, the central bank is urging foreign investors to take advantage of investment opportunities in the Philippines amid the country's rapid digital transformation. BSP Governor Ben Diokno said the introduction of new technology and knowledge transfer would boost the competitiveness of the local banks. He adds that this could also expand their access to new markets through partnerships. Diokno says these initiatives would enable financial consumers to gain not only from increased access, but also from lower costs, better products, and improved experiences. Now, with the pandemic serving as a catalyst, the share of digital payments to total financial transactions in terms of volume reached 20% last year from only 14% in 2019. And those are the biggest stories this trading day, December 29, 2021. Catch Business World live again. That's tomorrow at 9:30 a.m. for the market open, 3:15 p.m. for the market close. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.